Welcome to Luca and Miguel. Enjoy the video.
Open QuickBooks Desktop and enable Sales Tax by navigating to Edit Preferences Sales Tax and check Yes to turn on Sales Tax in the company file. Next, set your company tax agency and default tax schedule before recording taxable sales so QuickBooks can calculate liability automatically. Choose remittance frequency, monthly, quarterly, or annually depending on your agency rules, and ensure your fiscal year and filing dates match the agency requirements to avoid penalties. Create or edit a sales tax agency from List's customer and vendor profile, list sales tax agency and include the legal name, mailing address, and sales tax registration number for filings. Add sales tax items under List Item List, and if necessary, combine multiple items into a single sales tax code so invoices apply the correct combined rate. Enter specific tax rates, for example City 2, 5% and State 4%, to create a combined rate of 5% for accurate calculations on invoices. Assign the correct sales tax code to items and customers when creating invoices or sales receipts, so each transaction calculates tax automatically and posts to sales tax payable. Regularly run sales tax liability and sales tax revenue reports to reconcile collected tax, taxable sales, and jurisdictional breakdown before filing payments. When it's time to remit, use vendor sales tax pay sales tax to record payments. Attach remittance details and retain proof. Then mark the period as filed to keep audit-ready records and avoid duplicate payments.
Thanks for watching and please subscribe. It's the best investment you'll ever make.